chipmaker Nvidia posts better than expected third quarter results as a key beneficiary of the AI frenzy. India's second richest man faces 4 charges in the US, and Turkey is expanding its renewable energy resources as it looks to become among the top 3 in Europe. Hello, I'm Taiba Aydin and you're watching Money Talks. Investors have been digesting the highly anticipated third quarter earnings from chipmaker Nvidia this week. The AI darling reported a 94% surge in revenue for the third quarter to over $35 billion. Net income during the 3-month period rose to $19.3 billion versus $9.24 billion in the same period last year. The chipmaker says it expects around $37.5 billion plus or minus 2% in current quarter sales. Nvidia has been a primary beneficiary of the AI frenzy over the past year, with the previous 3 quarter sales rising 122, 262 and 265% respectively. Let's get more on this now with Naeem Aslam. He's Chief Investment Officer at Zay Capital Markets. Good to have you on the program with us, Naeem. Now, while the chipmaker beat expectations and posted strong guidance, equities initially fell following the results. What has affected investor sentiment?
Sure, thanks for having me. I think just a bit of a wind coming out of the entire rally that we have seen for Nvidia and for the whole artificial intelligence sector. But I think the numbers, as you correctly mentioned, they are giving very clear message that the company still has a very solid future. The quarters ahead are still going to be very strong, as you can see by their forecast for the next quarter seems to be incredibly strong as well. And the other thing that we have still learned, and then we're still in the process of digesting, is that the current earnings season from the blue chip company is sending this consistent message that there is a still need and a huge demand from their side to continue to deploy Nvidia's chips for the development of their own artificial intelligence system. So I think from an investor's perspective, no matter who we're speaking to, whether we are speaking to a high net worth individuals or whether we are speaking to a fund, whether we are speaking to a smaller investor, the sentiment among them is that, okay, we wanted to hold this particular stock still because we understand that this is going to continue to move to the upside. What is your opinion in relation to that? And then we very much echo their sentiment and we very much relate to the numbers. And then the numbers are telling us a very strong story, which is that Nvidia is a stock that you still wanted to have in your portfolio going into 2025, despite the fact that we have a stellar rally for the company in 2024.
Right, and Nvidia issued a guidance of an around 70% growth in sales this quarter compared to over 260% that we've seen in the past. Does this suggest a slowdown in demand for its AI chips?
Yeah, look, I think it's a bit of a reality check than anything else to that, because obviously when the boom and the cycle is at its peak, then you will see those estimates inflating to an extent which will make you think that, okay, is that demand really that strong? But I think the current numbers are, again, getting back to reality. But the fact is that when you are speaking to investors, to the shareholders of Nvidia, yes, they are thinking of whether this is a good time for them to take some profit off the table, especially as we are marching towards the end of this particular year, and then deploy the capital or the capital gains that they have made from this particular stock going back into next year at a better opportunity. But no one is really willing to sell the entire holdings and then sit on the sideline. Why? Because they understand that there's a strong potential for the company and there's a strong demand. And in terms of a competition, there is pretty much next to none.
All right, Naeem Aslam, we will have to leave it there. Thank you very much, as always.
Thank you for having me.
Asia's second richest person, Indian businessman Gautam Adani, and 7 others have been indicted in the US for paying $250 million in bribes to secure $2 billion in solar energy contracts. They allegedly misled US investors while raising billions of dollars, facing charges of fraud and conspiracy. The SEC has also filed civil complaints, but Adani denies the allegations, calling them baseless. Smita Sharma has more from New Delhi.
This is a damning and a latest blow to 62-year-old Mr. Gautam Adani, one of India's richest and most powerful businessmen, business tycoon whose conglomerate extends from ports, airports to renewable energy across several countries. In several places, we have seen a monopoly of sorts by Mr. Adani, somebody who's perceived to be extremely close to Prime Minister Modi and has been attacked consistently by the opposition, in particular Congress leader Mr. Rahul Gandhi, who also held a press conference following these reports of the US indictment by a Department of Justice that essentially alleges that Mr. Adani paid bribes to the tune of $250 million plus and counting to several state governments in India for selling his solar plants, and that all this information was also concealed to US investors, of course, on US soil. Now, Mr. Adani, remember, has been at the center of various controversies. In 2023, the well-known US short seller Hindenburg had, of course, come out with a report talking about the malpractices and corruption as far as Mr. Adani's companies were concerned. These were allegations that were vehemently denied by him.
Let's get more on this now with Sunil Poshakwale, Professor of International Finance at the Cranfield School of Management. He joins us now from Birmingham in the UK. Thanks for being with us, Professor. Now, Adani stocks tanked significantly following the news of Gautam Adani's indictment. What kind of repercussions are we likely to see here for the Adani Group?
Well, it's very interesting, isn't it? Lots of people are questioning how come a New York court what right New York court has to bring indictment charges against Adani by a person who is an Indian businessman, and if these alleged crimes were committed, they were committed on the Indian soil. So there is a lot of skepticism going on at the moment in terms of debate. People are asking whether this is US really using this extraterritorial justification and violating Indian law and India's sovereignty. But having said that, Adani Group has been under attack, as we know very well from the first report that was released by Hindenburg. And subsequently, after that, they also raised another report. It is going to impact the fundraising initiatives of Adani. It has been reported that $600 million worth of fundraising has been scrapped by Adani recently following this news of indictment. So clearly it's going to have some impact in terms of funding of the projects. What is very interesting also is that the 5 states where these contracts were, so-called won by Adani Group, they were all actually non-BJP states. So this there is quite a bit of politics going on here at the moment, where people are sort of trying to somehow connect Adani to Prime Minister Modi, who has made this, his goal to actually reach 50% of its energy usage, India's energy usage through renewables by 2030. So clearly it's going to have some impact on both the ambition of India's ambition for renewables as well as fundraising activity of Adani Group.
And can the Adani Group survive this scandal, in your opinion?
I think so. I think these cases are now increasingly being looked at with some element of skepticism, because remember, Hindenburg brought not just 1 report, but 2 reports. And when they brought the second report, there was hardly any impact on Adani shares, as opposed to the first time when the shares lost nearly 23% of their value. So I think at the end of the day, people are also looking at the kind of business that Adani Group is doing. They are in a big way in the infrastructure projects. And it is well known that India's need for infrastructure are absolutely gigantic. And in that sense, the business and the uh, area in which they are operating has got huge promise, and therefore I don't see any long-term significant effect on the either on the Adani Group's work or on the infrastructure ambitions of India.
Okay, Professor Sunil Poshakwale from the Cranfield School of Management, thank you very much for joining us.
Thank you.
Turkey is increasing its domestic energy production from nuclear and fossil energy to other renewable sources like solar and wind. Moving forward, the country knows the value of these energy sources. In order to make them more efficient, they've invited ministers and businesses from around the world to discuss all things energy. Emre Boz was at the event.
Turkey is expanding its energy production, looking to increase its drilling operations to 270 in 2025. That's one step closer to being more self-reliant in its own energy resources. And the nation also wants to be an energy hub for the region. That's what makes events like this at the Istanbul Energy Forum so important. Experts were discussing ways on how they can be more efficient in fossil fuels energy, and also how they can move towards a greener future. Turkey is planning to quadruple its investments in renewable energies to $80 billion by 2035. And being here and listening to all of the speakers, all the buzz was about new technologies and innovation in moving towards smart energy transition. That's renewable energies such as wind, solar, and hydrogen, and also how nations can be more efficient in their own energy production. So events like this foster collaboration and knowledge transfer between Turkey and other nations, helping these nations move towards a more sustainable energy future.
Turkey actually had really huge progress in renewable energy in recent years, especially after 2010. With the incentives provided by our government when the cost of these technologies were still high at that time. So today, by 2023, 55% of our installed power and 42% of our power generation comes from renewables. And now we have even more ambitious targets with the recent 2035 roadmap declared by the Ministry of Energy. Now our target for wind and solar energy is 120 gigawatts for 2035, which means that we have to quadruple our existing capacity, which is around 30 gigawatts for the moment. So this is a really ambitious target beyond the actually ambition of many other countries, which is really great. Turkey, of course, has a huge potential and has some other advantages as well. We have, with the incentives that were provided, previous local content incentives, now main components of the wind turbines and also solar panels can be generated, produced locally in Turkey, which is another important opportunity for Turkey. So renewables are now, with the development of the technology, it is the cheapest technology. They are local and they are clean, so they are great for optimizing this energy trilemma, which is energy supply security, energy affordability, and also sustainability, because now with the declaration of net zero targets, sustainability is also one of the main criteria of our energy policy, together with affordability and together with supply security. So renewables are, in that sense, very important for Turkey.
Turkey's finance structure is getting a shake-up after the President's Finance Office, the Islamic Financial Services Board and the Participation Banks Association of Turkey have pledged to work closer together. The country aims to increase Islamic finance's share of the banking sector to about 15% by 2025. Ömer Bakkaloğlu reports on what this ethical way of banking will mean for savers and investors in Turkey.
Islamic finance may have its roots in Muslim majority countries, but today it's a concept that's gaining traction far beyond these borders. The name might suggest a religious focus, but its principles are universal. It offers a model based on ethical and socially responsible investments, rejecting interest-based lending, and steering clear of industries like alcohol, tobacco, and gambling.
The rest of the world is discovering that Islamic finance is not for Muslims only. Anybody can benefit from it. And also they are discovering that the instrument that Islamic finance is using is very familiar to them. They use leasing, they use deferred sale, they use partnership kind of thing. These instruments exist in every society.
The sector is projected to hit $5 trillion in assets by 2025, driven by an annual growth rate of up to 12% over the past decade.
Not less than 3 decades ago with zero assets, and now they are in over $4 trillion in terms of assets. And that just gives you an indication how competitive the industry is.
And this growth isn't just on a global scale. The sector, also known as the participation banking, is also playing a growing role in Turkey. The CBFO, IFSB, TKBB Forum, organized by the Presidency of the Republic of Turkey's Finance Office in partnership with the Islamic Finance Services Board and the Participation Banks Association of Turkey, is a crucial step toward further integrating Islamic finance into the country's economy. Turkey is doubling down on its push to expand Islamic finance with the goal of boosting its share in the banking sector to 15% by 2025. And events like this one at the Istanbul Financial Center highlight the country's commitment to reinforce its position as a dynamic hub for Islamic finance. The forum brought together representatives from various institutions to foster cooperation and encourage knowledge sharing.
We have stakeholders from regulatory bodies, central bank, from participation bank, and all other relevant stakeholders. We discussed the current situation of standards and regulations in Turkey, and we got some advices for further enhancement in the morning workshop. And today in workshop, we listen from the IFSB representatives more about their activities and how we can develop much more cooperations with them.
As Turkey continues to pave the way, the sector's growth here could serve as a model for other nations looking to tap into ethical and socially conscious investments. Ömer Bakkaloğlu, TRT World, Istanbul.
The US healthcare system is constantly under scrutiny. President-elect Donald Trump has turned to a celebrity to lead the medical charge, promising big changes. But will his appointment ease the growing crisis? Sara Altaş has more.
The US healthcare system is at a tipping point. Rising costs and chronic illnesses are stretching it to its limits. Now, US President-elect Donald Trump has made a surprising move. He has chosen Turkish-American celebrity doctor and lifestyle coach Mehmet Öz, aka Dr. Oz, to lead the Centers for Medicare and Medicaid Services. Oz trained as a heart surgeon and became a household name after featuring as a regular guest on Oprah Winfrey's show. He subsequently built his own TV and lifestyle empire. Trump believes Oz's experience will bring much-needed healthcare reforms.
He's been an incredibly successful man on television and medicine. He knows what's happening, and he's going to work and fight for Pennsylvania. Thank you.
The CMS oversees Medicare and Medicaid programs that cost the U.S. government $1.4 trillion last year. They provide health care for more than 150 million Americans. Trump has tasked Oz with cutting waste and fraud in the nation's largest and most expensive government agency.
Our broken healthcare system harms everyday Americans and crashes our country's budget. Dr. Mehmet Oz will cut waste and fraud within our country's most expensive government agency, which is a third of our nation's healthcare spend, a quarter of our entire national budget.
U.S. healthcare spending rose by 7.5% in 2023, reaching nearly $5 trillion. This year, analysts expect it to climb even higher. The average amount spent per person is projected to exceed $15,000, adding more strain to an already overwhelmed system. These rising costs are driven by higher spending on Medicaid and private insurance. The increasing number of chronic illnesses also adds to the burden.
I just hope that he has some really good views for the city, and he's honest and upright. And I think that's the most important thing, because we need the economy to come back. And it's important that we have someone that's in office that's going to be honest and doing everything that's right for the people.
For many families, affording basic healthcare has become a major challenge. Oz's appointment marks a significant milestone. Under his leadership, the centers are expected to take charge of key responsibilities. This includes managing Medicare and Medicaid's influence on insurance markets and overseeing hospital and drug pricing. But millions of people are still waiting to see if these reforms will ease the burden or bring new challenges. Sara Altaş, TRT World.
Artificial intelligence is making waves across industries, and the renewable energy sector is no exception. A groundbreaking project in the UK is using AI-powered robots to revolutionize the maintenance of offshore wind turbines. Lara Kılıçarslan has the story.
Wind energy is the fastest-growing source of electricity in the world, offering an efficient and sustainable renewable energy option. But rapid growth brings challenges.
If you look at what's happening in the offshore sector, we're moving from oil and gas to renewable energy. And in the near future, worldwide, we're going to have hundreds of thousands of wind turbines. And these turbines will need to be inspected and maintained offshore.
The UK has over 2,600 wind turbines in the sea, and the goal is to increase this number by 4 times by 2030. Each turbine needs up to 3 maintenance checkups a year, and more as the turbines get older. The solution? An autonomous underwater robot powered by AI, developed for around $1.7 million for a project called Underwater Intervention for Offshore Renewable Energies, or UNITE. The robot is currently undergoing tests in Edinburgh.
This project's looking at the elements of creating autonomy in the offshore sector, where the environments are harsh, and we're trying to move people from those dangerous situations, and also there's not enough people to do the kind of inspections or the frequency of inspections that are needed. So that's kind of the big problem that we're trying to solve here.
Thanks to AI and 3D mapping, the robot can create detailed underwater maps, pinpointing exactly where repairs are needed. Its AI brain is a master of decision-making, choosing the best routes to gather data and spot issues. It can work in rough seas and navigate around turbine structures on its own. This is especially useful in places like the North Sea, where visibility is often poor.
Artificial intelligence is mainly a big autonomy engine that is analyzing the environment to see where should the robot go next to collect good data about the environment and how to autonomously navigate between these different places and also utilize the environment to its advantage.
Heriot-Watt University leads the project and involves other partners like Imperial College London and Fugro. The goal is to provide detailed data in just 3 hours, much faster than the current industry standard of 3 weeks. Sea trials are on the horizon for early 2025, bringing this game-changing technology closer to reality. Lara Kılıçarslan, TRT World.
Volkswagen has so far struggled to find success making and selling electronic cars. It's now joined forces with American EV maker Rivian, hoping to change its fortunes. Punani Shasta has the details.
It is a move to add some spark into an ailing dinosaur. German car giant Volkswagen is investing $5.8 billion into a joint initiative with the US-based electric car company Rivian. With the agreement, they'll create an independent company to develop technology for electric vehicles. VW has the reputation and infrastructure. Rivian brings its electric expertise. The collaboration comes as the German giant is struggling, particularly in the American market. The manufacturer's share of the electric car market in the US was just 3.4% in the third quarter. That's led to a 42% decrease in profits, only $3.1 billion, their lowest profit in the past 3 years.
Well, it's not that we are denying that we are in a difficult situation. We are seeing this in the automotive industry as a whole, not just in the Volkswagen brand, but in all the brands. And of course, we also want to take this situation into account.
Volkswagen is still the second biggest car company in the world, but it's had to ask its 120,000 workers in Germany to accept wage cuts of 10% and threaten to close factories there. This has sparked massive protests. Rivian is also struggling, reporting huge losses in sales. They reported a third quarter loss of $1.1 billion, on top of the $1.4 billion it lost the same time last year. But Rivian is confident it's about to turn the corner.
We've really been able to understand what we need to do to continue to move forward and really be smarter about what we're doing and not just brute force our way into it. Being much more smarter, take the engineering and the tactical approach to make sure that we're driving down costs, driving up the efficiency of how we build our vehicles.
A collab with Volkswagen will raise awareness of the Rivian brand, while the rave reviews Rivian has received will boost VW's reputation, especially in the electric car market. Connecting the two businesses could be a win-win. Pranay Nishasta, TRT World.
And if you have any stories you'd like our reporters to look into or any questions for our experts, you can reach out to us on X at TRT Money Talks. Well, that is all from Money Talks for now. From me and the whole team here in Istanbul, thanks for watching.